Bret Jensen 是著名的网站 Seeking Alpha 排名前1%的博主。他在本次 Money Show 上的讲话呢，也是大家时下最为关心的话题：如何利用最小的风险，在生物医药板块获得最大的利润。Well, thank you so much for joining us, Mr. Jensen.
You know, the biotech sector has been the top performer in the past 4 years. So some people say we're in a biotech bubble. What's your opinion towards that?
I think the sector is starting to get a little frothy. You can tell this because there's a huge amount of IPO activity. There's 5 new biotech IPOs this week.
Right.
There were 4 last week. You've seen a huge amount of secondary offerings, especially in the small biotechs that have run up. This is usually a sign that things are getting a little overvalued. You saw the same type of activity in the small exploration and production companies on the energy side last year about this time. And right thereafter, you had the plunge in oil prices, and some of those companies are down 70%, 80%. A couple have gone bankrupt, like American Eagle Energy.
Right.
So I think biotech is probably a little overbought here. I don't know if I would call it a bubble, but I would be more on the cautious side. I'm not really adding to my biotech positions. I have taken some profits. I'm trying to go ahead and mitigate any kind of risk that we're in a bubble by investing more in the large cap growth plays that are selling at very reasonable valuations with their growth prospects.
Right.
So top of that list would be like a Gilead Sciences, which is growing 30-35% on an earnings point of view and 15 to 20% on revenue, going for about 9.5 times earnings. Their Hep C blockbusters, Sovaldi and Harvoni, they did $12 billion in sales last year, which is a record for any new product ever launched. And they're just starting to get in market in Europe. They just got approval in Japan. So that would be the one big safe biotech that you can go ahead and invest in, whether we're in a bubble or not. Some of the other big names that are selling at reasonable valuations and will do well, or at least will do okay even if the market turns over for a while, would be something like a AbbVie, which has a number 2 global selling drug in Humira, or Celgene. Celgene's another one. That is, I'm adding to on pullbacks. I'm kind of hoping to get some sort of downturn in the market so I can go ahead and put some of the cash I have on hand to work. Some of the smaller plays, especially the ones that have been driven by trends like the CAR-T stocks like Juno Therapeutics, Kite Pharma, Zeopharm, Bluebird, that's gone up. They tripled and quadrupled, and they've come down a good 25-30% over the last 6 weeks, with the exception of Bluebird, which is still doing very well. I'd be very wary of that. They have some really promising technology. They really could change the medical landscape, because what they basically do is they engineer your immune system to fight your personal cancer. So it's kind of like the stem cells were 10 years ago, where it is a great possible technology, but nothing really came out of the stem cells. The stocks, like the poster child for that was Stem Cell, which is STEM. At one point, it had a $7 billion valuation. It's now worth less than $100 million.
Oh, really?
So I would probably avoid the more volatile portions of biotech. In addition, the risk-on sectors, such as small biotech, you're coming into a seasonal calendar, like May through September, that they usually do not perform very well. If you look at historicals, the biotech sector does really well in the 4th quarter and the 1st quarter. The 2nd and 3rd can be weak. I think because a lot of money goes in the IPOs and secondaries, and you have kind of the same reason the overall market is usually a little stronger towards the end of the year. And the 2nd and 3rd quarter is more for large cap growth that have more stability, whether it's biotech or any other part of the market.
Right. Well, it is true that the biotech sector has been given the biggest gains of all-time highs, like those names you mentioned, Gilead, Celgene. But a lot of people still think the biotech sector is very risky. So what is your secret in minimizing the risk?
My secret is to go ahead and weight, or first of all, have a very well-diversified portfolio. So I have 5 large cap biotech stocks, stuff like Gilead, Celgene, AbbVie, and then I have 15 small cap biotechs that are spread over different treatment focus areas, different stages, and my large caps are weighted 3 to 6 times more than my small caps. And so that means that 50 to 75% of my funds are to the large caps compared to of the overall biotech portfolio. Right now I'm weighting those a little more on the 3 to 6 scale, so I'm probably 60% is large cap, 40% is small cap, because I do think we're over, and I have about 15% in cash overall in my portfolio. So I expect that there will be some opportunities. I wouldn't be surprised if the biotech sector is flat or slightly down over the next few months. But there are some good buying opportunities. Gilead is a stock you can go ahead and buy and hold for the next 3 to 5 years. Some of the smaller ones, if you're waiting for entry point, I'd probably wait a little while longer. I think right now, biotech for me is equal weight. And I think there would be better opportunities in the next couple of months.
Okay, good. So at your speech, you mentioned that partnership is critical for small caps.
Oh, absolutely.
So,
and when we talk about partnership, it's a small company where a big company like a Glaxo or a Pfizer comes in and they go ahead and say, we want to go ahead and co-develop a drug or drugs on your platform, and they get a global licensing deal where they pay upfront fees and then they pay milestone payments, and it ends up being a successful drug. They go ahead and get royalties on the drug sales. This is very important because it validates the technology of the smaller firm. Obviously, the bigger players in the space have a lot of PhDs in biochemistry. They've vetted the technology. Obviously, they're going to put hundreds of millions of dollars up front to go ahead and enter a licensing deal. They've done their homework. It also helps the smaller cap firm, and they get the knowledge from the larger player how to go ahead and go through the approval process, because that's a very complicated thing. Also, they receive funding to help co-develop the drugs as well. And if they're successful, they have a global sales force, because some of these small names, they may have only 50 salespeople, where someone like a Pfizer might have 10,000. So once you get out there, you can go ahead and roll it out on a much larger scale. So partnerships are very important. Some of the stocks I have in my portfolio that have done extremely well have been driven by partnerships led by Eagle Pharma, who signed a huge partnership deal with Teva Pharmaceuticals, which is the largest generic drug maker in the world.
What do you think about I'm glad you brought up Teva. What do you think about Mylan rejects Teva's takeover?
It's very interesting because it's a rich price that Teva wants to take over Mylan, and Mylan has some defense mechanisms out. They're trying to buy Perrigo. It's almost like a soap opera, right? But the one question that I have is that Teva is the #1 market share leader. Mylan is #3. Given the administration has, put aside mergers that were planned, like Comcast and Time Warner and Tokyo Electron with another American player like 30 billion market cap, and said no. I don't know, even if Mylan wanted to be taken over by Teva, I don't know if the regulators would actually allow it. So there's a regulatory risk as far as getting that merger approved. So I don't think it's going to happen.
But the truth is Mylan's stock price soared a lot after the
Mylan, of course, because someone's going to say Mylan's worth a lot more than what the market is putting on it. Now, if Teva gives up, that stock may go down a little bit more. I mean, it's a good long-term value, as is Teva, but I just don't think that merger is going to happen.
Okay, good. And then I want to ask you about how do you value those biotechs in phase 1 or phase 2? I'm sure you heard about some people say phase 2 is a sweet spot for biotech. Do you agree?
The whole approval process is extremely complicated. You have hundreds of companies that are spending tens of billions of dollars a year to get drugs through the approval process.
Right. Then how do you discover?
Last year, only 41 new drugs were approved. So you want to go ahead, especially on the smaller caps, you want to spread your bets around. You want to go ahead and pick stocks that have multiple shots on goal. So they have several candidates or different phase trials to kind of diversify your risk. And that's why I really like to see those partnerships, because to me, that means a larger company with a lot of experts to say this is really good technology and we're going to go ahead and fund it, and their chances again through the approval process goes up with the partnerships. Without the partnerships, trying to go ahead and instead of investing in one or two firms like you do in most sectors, you want to spread that around in smaller stakes, because hedge funds with PhDs in biochemistry, they get them wrong as much as they get them right. They strike out and they hit home runs. And that's why diversification in biotech is more important than any other sector that I follow.
Okay, good. Are you familiar with Valiant Pharmaceutical?
Valiant, a little bit. Obviously, they're a acquisition monster. That is their basic business model. They go in, they buy companies, they slash R&D to the bone. They try to go ahead and get price increases on some of the, and that's why they're kind of getting on the radar of some regulators right now.
Well, Bill Ackman said they will be the next Berkshire Hathaway. Do you agree?
I have to disagree with Ackman on this, simply because if you look at where Valiant's trading price to cash flow, price to earnings, they also have some very aggressive accounting. It's not one I would buy. Now, they do have a partnership with a stock, a small stock called Progenics, which is PGNX. And I think that partnership is going to be very good for Progenics. I don't know if it's such a small entity, it's not going to make a difference to Valiant one way or the other. But I'm not Valiant's had a massive run. They're up, I think, 5 times over the last 6 years or something along that. It's been provided a lot of shareholder value, but I wouldn't be buying at this price. I think there's better bargains out there.
Okay, thank you. Thank you very much.
Well, thank you for having me.